Have you noticed that despite this once-in-a-lifetime property boom, where property prices have shot up by more than 20% in some areas, there are still areas in Australia where property prices are just not moving at all. If you own an investment property and it has been underperforming over the last few years, it is very important to understand why this is happening and to not just blame it on bad luck. Yes, there is definitely a bit of luck involved when it comes to investing, but over the long term, luck should have a very small effect on your overall investment outcome. A lot of investors are under the impression that their investment will start growing very soon. But the truth is, the bad investments are going to continue to underperform for the foreseeable future. I have mentioned this in my previous videos and I'll keep mentioning it until you guys learn this very important lesson. You can buy in the perfect location, close to transport, amenities, schools, shopping centers and everything. But if you buy the wrong type of asset, it is going to continue to underperform. In today's video, we are going to look at some of the factors that I personally consider before buying an investment property. These are factors that I always look at before buying a property for myself or for one of my clients. And these factors will play a very important role in how your investment performs going forward. Hey guys, welcome back to the channel. I hope you guys are all having a lovely Sunday. Please enjoy today's video and remember that I am not a financial advisor and this is not financial advice. I am simply sharing with you my personal opinions and strategies, and I will always recommend you to please do your own research before investing hundreds of thousands of dollars into an investment property. Let's start by talking about a situation that a lot of first-home buyers and first-time investors have found themselves in recently because of just how crazy the growth in property we have seen over the last 10 years. A lot of them are finding themselves completely priced out of freestanding houses or even townhouses in the good areas. Because not everybody has a few $1,000,000 to buy a property in a blue chip suburb that is 10 minutes from the city. And because of that, people are not willing to sacrifice on location, are now buying a lot of investment properties that are apartments or even units. Look, there is nothing wrong with apartments, and some apartments actually do extremely well. We have all heard of these record-breaking sales in Bondi when apartments go for millions of dollars. I personally love the convenience and safety of living in an apartment, and my dream home is actually not a mansion in the eastern suburbs, but actually a penthouse in the skies. However, this now brings us to the first factor that we must consider when we are trying to find a property that is going to perform well over the long term, and that is scarcity. When we are thinking about property investing, it is a very simple equation of supply and demand. And if we want our properties to grow consistently over the long term, we want the demand to exceed the supply. This unbalanced equation where there is more demand than supply is going to drive price appreciation. And this is exactly what we saw over the last 18 months as hungry buyers pay crazy prices just to get a property and outbid the other people who are looking to purchase the same property. Because over the last 2 years, the supply of new properties coming onto the market simply could not keep up with the surging demand. And because of this, a lot of homeowners have made some ridiculous money over the last 18 months. So the number one factor that we should think about when we are buying an investment property is the scarcity. So the first step is always to choose a location that is going to be desirable consistently. So more and more people are going to want to move into this location and buy properties here. However, we must also think about the supply side of this equation. If we have big developers coming in and building hundreds and hundreds or even thousands of brand new apartments in these locations, these apartments are not going to be very scarce because the supply is simply too great. Think about it from the buyer's perspective. If a buyer looks at your apartment and they have 100 or even thousands more apartments exactly like it, they are not going to fall in love with your apartment and they are not going to make an emotional decision to pay too much for your apartment. The same concept can be applied to home and land packages because there are just so many of them and they all look exactly the same. So the competition is actually between the sellers trying to find a good buyer instead of the other way around. Moving on, the second question that we must ask ourselves is this property that I'm looking to purchase an investment grade property? There are more than 10 million dwellings in Australia with an estimated value of just over $9 trillion. So when a buyer is looking to buy a property, they definitely have a lot of options. However, based on my personal opinion, less than 10% of these 10 million properties is what I would call an investment grade property. So what is the investment grade property? Well, first of all, an investment grade property should be able to generate consistent growth over the long term. So the first step to finding an investment grade property is to identify a market that is going to perform well over the long term. But remember, even if we do identify a good market that has got good fundamentals, if we buy the wrong type of properties, these can still underperform. I personally prefer to look at properties that have a good land component, which is in a prime location. So obviously a townhouse or even a freestanding house is what I would personally go for, because the land component is what grows in value over the long term, because the building on the land is going to deteriorate over time and actually cost you more and more money to repair and maintain. So what appreciates in value is the land, and that's what's scarce and what's limited. Investment grade property should also be able to generate consistent and strong cash flow. So if you buy a property in a very oversupplied market, the vacancy rate is going to be very, very high. So that is not going to generate consistent income for you. And you are likely to deal with high vacancies and rent reductions as you compete with other owners who are trying desperately to fight for the same tenants. A good investment property should also be solid and easy to maintain, meaning the owners will not have to spend a lot of time or money maintaining it every single year. This will then make this a very easy set and forget investment that is going to perform very well over the long term. So if you buy a property that is very run down and it's going to cost you hundreds or even thousands of dollars every single year just to maintain this property, this is probably not what I would call an investment grade property. Let's now move on and talk about the third factor, which is very, very important. Because if a property does not have an owner-occupier appeal, then you can't expect the bidders or potential buyers to fall in love with it and make stupid offers on it. Once again, going back to apartments, the issue I see with most apartments nowadays is that there are so many of them and they all look exactly the same. It's not unique, it does not have any owner-occupier appeal. On the other hand, if you have a townhouse or freestanding house that has been renovated, or it is unique in a good location, the tenants are going to fall in love with it, as well as the people who are going to buy it in the future. And this will then increase the chance of them making an emotional decision and overpaying for this property. Another thing to remember is that when you are buying an investment property, your goal is to find a good long-term tenant who is going to live there for a long time and look after the property. So let me ask you a question. A family who's looking for a home, are they more likely to stay in an apartment for a long period of time, or are they likely to stay in a freestanding house that is unique and renovated for a long period of time? If we just think about it from our own perspective, which one appeals to you more? And which one would you rather live in? So if you don't see yourself living in a property for a long period of time, why would you expect your tenants to live there for a long time? Let's now ask a very important question. Is it better to buy a brand new property or an established property? If you have been watching my previous videos, then you will know what my personal preference is. But I must make it clear that there are definitely pros and cons for both brand new and established properties. To get a better understanding of why I personally prefer to buy an older established property, let's use a real life example. Let's say we had $550,000 to spend on a house in Werribee, which is a suburb just on the fringe of Melbourne. There are a lot of developments going on there and there are plenty of home and land packages to choose from. Based on our budget, we have a few different options. We can either buy a brand new home and land package on the outskirts of this suburb, or we can buy a nice established home in a much better and central location. Yes, the brand new house will look much better, but it is only sitting on a land size of 400 square meters compared to the 540 square meters on the older established property. The older established property is also on a corner block, which makes subdivision a real possibility. But the brand new house does not have enough land for us to subdivide it later down the track. The truth is, most people will choose this brand new home and land package that's in the middle of nowhere because it is human nature to want something that is brand new, shiny and modern. However, when we choose the brand new property over the established one, we are sacrificing a very important aspect of property investing, and that is the location and the land size of that property. Not only are we getting less land, the quality of that land, the location of that land is much less desirable. Now, the next part is very important, so make sure you pay attention to this part. When it comes to property investing, there is one person that you have to impress no matter what. It is not the broker, it is not the real estate agent, and it is definitely not your partner. It is actually the valuer. Valuer values your property at less than what you paid for it. It could mean that the bank is going to ask you for a bigger deposit. But on the other hand, if the valuer values your property at more than what you paid for it, you've made an instant profit. So when it comes to choosing an investment property, it is very important to find a property that is investment grade and will impress the valuer. And to be completely honest, if you buy a brand new townhouse in the middle of nowhere, the valuer is not going to be that impressed because there are hundreds or thousands literally right next to it, and they're all looking exactly the same. However, a property on a corner block in a much better location is going to tick a lot of boxes for the valuer, and this is likely to bring a more favorable result for you and make it much easier for you to get into your next property. So remember, the valuer is your best friend when it comes to property investing. So impress the valuer with your property selection. Let's now use another example and look at apartments. Should we buy a brand new off-the-plan apartment or the older established apartment? Nowadays, apartments are popping up literally everywhere, and it is very easy to find an apartment in a good, desirable location. But the question now becomes, should we buy something that's brand new and shiny? Or should we buy something that's perhaps 10, 20, or even 30 years old? Once again, there are definitely pros and cons for both. But my personal preference is to buy the older, established one for two main reasons. First of all, scarcity. Back in the days when they first started building apartments, they used to only build apartments in blocks of maybe 20, 30 or 40. Fast forward to now, we see skyscrapers popping up literally everywhere, filled with hundreds or even thousands of apartments. And nowadays, the developers are really trying to milk it and maximize their profits. And as a result, these apartments are becoming smaller and smaller. I'm sure you guys have heard of the term shoebox apartments, and this is exactly what it's referring to. Some of these new apartments that are coming out nowadays are so small that you wouldn't even put your dog in there. The second reason why I would prefer to buy an older apartment is value. When you are buying a brand new apartment, you are paying a hefty premium to the developer to cover their costs, because after all, building, marketing and selling these properties is not cheap, and all of those costs have to be covered, and you are the one paying it. So often you can find an older apartment sometimes on the same street for maybe 20 to 30% cheaper. And not only are these older apartments built to a better quality, because the developers nowadays make these apartments so damn quick and they're all just chasing profits, that some of this rubbish that they are building nowadays are barely compliant. And finally, when you buy a older apartments that is bigger and 20 to 30% cheaper, while people are buying brand new apartments for 20 to 30% more, what do you think happens to the median house price there? So median apartment price. The median apartment price is going to get dragged up, and as a result, you are going to benefit by paying much less. For example, if you buy an older apartment for $350,000 and people are buying the similar kind of apartments but brand new off the plan for $450,000, the median apartment value in the area is going to get dragged up by all these brand new apartments. So this is another great way to impress the valuer, because you have a much cheaper apartment that you pay less for, but it is of a better quality and bigger than these brand new apartments that people are paying $450,000 for. Alright guys, I've just shared with you some of the factors and the thought process that I personally go through when it comes to making key investing decisions. I hope this was helpful to you and that you guys learned something new. If you did, please do me a huge favor by supporting the channel by hitting that like button right there and commenting your thoughts. It really goes a long way in helping this channel grow. Stay safe out there, stay productive, and I'll see all of you guys in the next video.